in investment. So just a quick video. Uh, I was analyzing the market today. Before that, when I was analyzing the market before that, I took a very huge loss in fee puts. Normally, I don't take, I don't tolerate this big loss. But it is but it's okay. But it's okay. Like it's all right. I didn't lose much capital, but it hit my stop loss, and I don't tolerate that much loss ever. I lost almost 44%. It did pan out my way how I wanted Infi to go. You know, it tested this support right, it tested this resistance right here. We tested this resistance right here, and it's showing sign of downside, and that exactly what happened. It hit my stop loss, and then that's okay. I can, but that I told you, if that is lost, I gain good on. I gain good on. I have gained good on uh, Zensar. Let it load. I've gained whatever I lost today on the whatever I lost today on Infi, I have gained it on Sensor. So that's fine. Professional institutes don't care about a stop loss; they care about hedging your position. That is what I am doing in crypto as well. So for that, let's go to the main topic. I was just analyzing today's market, like any good investments. In turn, I I was going to the stock Solarworld Energy Solution. You know, mm, Solarworld Energy Solution. First of all, revenue is quite impressive. It is showing signs of growth. It is showing sign of growth yearly and quarterly as well. It is showing sign of growth. So I thought why not invest? And I was thinking like then I checked its balance sheet. Wait, this is balance sheet. No, I'll open that. Solar World Energy Solution balance sheet. Yeah, this is my balance sheet. This is his balance sheet. Let it load. Let it load. The figures load. I don't like this of money control. It is very bad. It's very bad. This this solar world. And I'll just copy this energy solution balance sheet. It's not this one. Is it this one? Balance sheet. I'm sorry guys, I'm doing this in video. Okay, it's this one only. Okay, and so let's get to the main topic now. Why do I keep doing this? Yeah, you know, its revenue bought debt is quite good. Its long short-term borrowing is good. Okay, but that's tolerable. It is in its growth stage, so company may want to grow its business. This was the first red flag I noticed. Short-term debts, I'm not sure where it is going. 190.68 CR to 190. This is not good. This is not good at all. Is it? If they are taking debt to fund their expenses, that's not a sign of a growing company. I get it. Well, to buy assets, it's all right, but you're taking debt to fund your operations is good. And second thing I noticed was cash flow was like second. Cash flow was really impressive. Cash flow was really impressive. The cash balance they have is really, really, really impressive. Like I eventually thought of buying 10 shares, very small. Now, eventually thought buying very small amount of it. But what? But this one caught my attention. They're burning cash. And they're burning cash, And what I that surprised me. The cash flow is cash from operating activity is only negative 48. Is negative 48.48, and its trade and its cash is this much, and they're making good profit. So like I was surprised. This is really a paper profit because it's really, I think, to me this shows a sign of a paper profits. The cash whatever they are. First of all, this where is it? This uh, cash equivalence could just mean simply it could be them selling all their assets to cover their debt plus the loan amount plus their cash plus their little bit of cash which they got. And this is not impressive at all. The trade receivable is double. So it's not cash is not going in and out. Revenue from operation is like I'll open the revenue Solarworld P&L consolidated. If you look at its P&L, revenue from operation P&L is, I checked that, I checked it. This is also showing signs it is growing at a tremendous pace. Then I asked Perplexity. Um, Revenue from operation tells you how much business activity was recognized in a period until accrual accounting, but it does not tell cash in and out. Cash flow fills that gap. How much cash in and cash out is coming. So basically, what it tells is revenue from operation just predict shows the how much sales it generates, but not the cash it is going. This could include the trade receivable as well as cash from operating activity. But cash flow from operating activity doesn't show that. So that is the one negative sign which I have seen in this. Is negative sign is I have seen in this is uh, you know revenue from operation is growing. Revenue from operation is going. Uh, Revenue from operations is going good. Uh, Company is also getting very good cash balance, but that cash balance includes what? It's a pending debt amount which he kept it for reserve, as well as from the asset sales. Company will surely be selling some assets because this is not acceptable. A company could, if this is not acceptable. One tangible asset to and long-term borrowing, short-term borrowing, 190.68. This is not good at all. So they're selling their assets. So this cash equivalence could mean two things. We could mean uh, their pending debt amount, their asset sales balance, and their little bit of revenue. And uh, third thing is this is a company which is into this is a company which is into manufacturing of solar fields and plants. They don't actually run it, they just manufacture it and keep it. And considering how much green energy is going to be vital, how much data center is going to be vital, how much data center is going to be vital in future. Uh, I thought this would be a very good investment. It is at a, if you look at uh, weekly time frame, it's a pretty good risk to reward ratio. But I will be careful just blindly investing in it. Be okay for I would take a trade here, play it up and down game, but I would definitely wait for around 60 rupees something to be ready to be invested in it or not. So we will see um, how it pans out. But now, not now. If it shows sign of a positive cash flow from positive sign of cash flow from operating activities, and it shows its asset bases are increasing and not asset base. So if it's showing signs of, let's not forget about asset base here, forget about asset base. If it's showing sign of a trade receivable decreasing, you know, basically they operate like a contract. They operate like a contract. uh, they serve their business completely runs on contract. So how much Adani is getting is energy business. This could be one of the very good investments which I like so far. So we will see how it pans out. So let's see how it goes. Uh, let's see how it goes. So that's it from me today. Please like the video, subscribe, and I will see you in tomorrow's video.